Hi, Michael Yardney here, and welcome to another Property Insiders video as we discuss what's happening in our rental markets around Australia with Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au and Australia's leading housing economist. Welcome, Andrew.
Thank you, Michael.
Now, our housing markets have been flat for a while, and so have the rental markets. There's been some areas where there's been an oversupply, and Sydney's been one of the hardest hit cities. Rentals have been stagnant or, in fact, falling. When tenants move out, landlords have had to encourage new tenants to come in by dropping rentals. And despite yields increasing because property values have fallen, that's not really what landlords are after. It's not the yield on what their properties are worth. They want money in their pocket. So is there good news happening, Andrew? Are rents going to start to pick up?
Certainly, we're seeing some trends perhaps emerging in what's been, as you suggested, Michael, a flatter rental market over the past year, particularly in Sydney. We've seen vacancy rates in Sydney move really from the low twos, the high ones to over 3% tracking this year. I've got a sense that those vacancy rates will now start to consolidate. We've seen the peak of the first home buyer market, which took a lot of demand from rental stock. We're seeing particularly the apartment market now, vacancy starting to be soaked up there. And I think that the latest data does show that perhaps we've peaked in terms of vacancy rates in the Sydney market particularly. We've also seen an uptick in rents over the month in Sydney, and I guess that correlates with what's been a consolidation of vacancy rates. Other markets still remain by and large quite tight in terms of vacancy rates, still quite competitive amongst tenants, although we're not seeing any shakeout in terms of higher rents. I think that we're still seeing those markets hold, I guess, that tight energy. The exceptions, of course, are the mining states of the mining capitals of Perth and Darwin. By and large, our rental markets coming off a period where we've had higher levels of supply and reduced demand are now starting to consolidate when we've seen the settling in terms of reduced demand from higher first home buyer numbers. And we still have strong migration coming through into our capital city markets, particularly net interstate migration for Brisbane, which is pushing vacancy rates down and keeping rents bubbling along.
Well, clearly the markets are fragmented, so each state has got areas where there's oversupply, particularly of those new high-rise towers and other segments where there's a shortage of supply. But overall, with fewer new buildings in the pipeline, increased population growth, this oversupply is going to be soaked up and eventually rents are going to go up. It's been a different cycle this time around, Andrew. In the past, usually when the prices are flat and growth isn't there, rentals have gone up. Hasn't been that way this time around, has it?
Well, we've had a remarkable building boom, as you suggested, Michael. So supply has certainly continued to fertilise our rental markets. But even at that level of supply, we haven't really seen a downward decline in rents except in the Sydney market. So really it's been offset by increased demand, particularly from migration.
So on balance, good news for people interested in property investment. Good news in general about the sentiment of the market, about lower interest rates, about easier finance. So property values are going to go up and rents are now going to start heading in the right direction for investors. Look forward to hearing how that pans out over the next couple of months. Thanks once again for your time, Dr. Andrew Wilson.
Thank you, Michael.